Out of context, facts and figures can easily mislead. Is Africa's growing population a weakness? What about tomorrow? Don't get boxed in by today's opinions. With the Africa Report, understand Africa's tomorrow today. Politics, business, opinion, the Africa Report decodes the news for you. Available online on theafricareport.com.
Hello. Okay. Good morning, good afternoon. Thank you for joining this Renaissance Capital panel discussion in celebration of our 25th year anniversary as a full-fledged investment bank in emerging markets. As you might know, one of our core strengths is in producing best-in-class research. And from our early years covering large-scale utility companies operating in CIS and regions, till today where we dive into fast growth and highly disruptive financial technology companies in Africa and other frontier markets, the business continues to evolve along with our corporate and buy-side clients. Today, we will focus on Nigeria Fintech, which has fast risen to become one of Africa's most notable Fintech hotspots. The objective is to discuss where we currently stand in the evolution of Fintech in Nigeria, and more importantly, the next frontier. Please drop your questions in the comment section on YouTube or on the conference website. I'm delighted to welcome 4 leading players in the ecosystem to help us dimension the trends today. I thought I would start off by giving them a minute each to introduce themselves and what they do. So we will start off with you, Shola, and we go around, Fope, Olaoluwa, and Amir. Shola.
Hi, everyone. My name is Shola Akinlade. I'm the co-founder and CEO of Paystack. Paystack is a payments company. We help merchants accept payments from their customers. So we're live in Nigeria, Ghana, piloting in South Africa. I'm happy to be here. Looking forward to a good chat.
Okay. Welcome. Fope.
Great. Good afternoon, morning, evening, everyone. I'm assuming people are joining from all over the world. My name is Fope Adelowo. I work with Helios Investment Partners. Helios is one of the largest African-focused private equity funds. We invest all across the continent, from North to South Africa, and we manage just over $3 billion of assets under management. I'm delighted to be here today and looking forward to the conversation.
Okay, super. Olaoluwa.
Hi, I'm Olaoluwa, Samuel-Biyi. One of 3 partners at Hacked Ventures. Every day we sit around chipping away at exciting ventures, most recently Busha. It's a digital asset exchange in Nigeria, and a few other entities. Happy to be here to chat with you guys.
Okay.
Hi, everyone. I'm Amay. I work at Flourish Ventures, and we're an early stage VC fund with a purpose. Our mission is to further financial health of small households and business owners. And against that goal, we invest in entrepreneurs that are solving inscrutable problems in emerging markets. And we have a portfolio of about 60 fintech companies, $300 million of assets under management. And I'm very excited to be here and looking forward to this chat.
Okay, fantastic. I think you all have been very humble in your introductions. But as for me, I am Adelowo Shola, and I look after Renaissance Capital, Frontier Banks, and Fintech equity research. So let's jump into the conversation. My first question today goes to you, Fope and Amir. So Nigeria keeps grabbing some of the biggest Fintech headlines in Africa. Last year, we saw Visa's $200 million investment in InterSwitch, Opay's $220 million fundraising from Asia, and PalmPay's $40 million round led by Transsion. In recent weeks, we've also seen Paystack's $200 million plus acquisition by Stripe, and I'm sure there are more deals bubbling under. The question is this simply the case of bigger market, bigger checks, or does it truly reflect the scale of opportunity that is yet untapped? Fope, you can go first, then over to you, Amir.
Sure. Thanks, Soji. So, look, I think it's a variety of factors, and I'll look at it in different ways. If you start out with, what are the growth prospects for, let's say, electronic payments in Africa? and compare that to what that looks like globally. And I think our research has shown that actually over the next 5 years, digital payments or electronic payments in Africa is supposed to be the highest growth actually compared to any other region, and particularly in sub-Saharan Africa, where it's expected to grow by 35%. And within that, I think Nigeria is actually leading the charge with a growth rate of 39% that is expected over the next 5 years. And I think this is being driven by, lots of different factors. So one is just sort of macroeconomic and socioeconomic factors, which most people know. If you look at personal consumption expenditure over the last 10 years, in Africa, it's been the highest, around 27%. Well, the second highest, around 27%, which is just after Asia Pacific, which is growing at about 36%. And then you overlay that with, trends like urbanization, which, as many of you would know, there's really strong trend correlation between urbanization and the growth of non-cash payments. And when you look at Nigeria, actually, the sort of urbanization rates over the last few years has been 4.5%, which is larger than the rest of Africa, which is about 3.7%. And if you look at LATAM, where it's by 1.2%. So I think these are some of the factors that I think are creating a change, not only in consumer behavior, as you have more urbanized segments of the population, but really creating a bigger addressable market for fintechs and also financial services companies that are seeking to serve these businesses. I think the second factor is that actually when you look at electronic payments in Nigeria, the reality is cash is still king, right? There's this great picture, I think it was a video actually, that I saw in Nigeria just post-COVID, where everyone had been, or I should say post the lockdowns in Nigeria, everyone had been in lockdown, and for the first time, the banks were open. And there were these massive queues outside of the banks and people rushing to get into the banks, almost like there was no more COVID. It was like the day after and there was no more COVID. People were just rushing. And what it struck me was these were people that were going to the bank to get cash. And that's because over 95% of transactions in Nigeria are still cash-based, and most of the basic needs of individuals are still being served by cash. Now, that's 95% today. 8 years ago, it was 99%. So clearly, there's a move towards more electronic payments that has already started happening. And actually, we think there's still a lot more room to grow in Nigeria. And I think that is also overlaid by the fact that there are lots of players which have been building sort of payments infrastructure across the country, and that has increased over time. So if you take what the banks are doing, with the telcos are doing, or even what Paystack is doing. So Paystack, for example, they can enable any merchant to accept payments within 30 minutes, right? So that's really creating infrastructure that can support payments. If you look at any metric, if it's internet penetration, which is obviously internet and mobile penetration, which is facilitating new ways of making electronic payments, or even the number of POS machines out in the market compared to any other market in Africa, and Nigeria is actually quite high. So I think there is built-in infrastructure. There are other examples like InstaSwitch, for example, which has Quick Teller, where any consumer can go online or even at an ATM and do any transaction like a bill payment, or Verve, which is now a low-cost card scheme targeted to lower-income population in Nigeria, and is now the largest debit card scheme in Nigeria over Visa and MasterCard. And I think all of these factors are really driving the sort of ingredients to really drive explosive growth in payments in Nigeria. So yes, it is a big market, but I think there are a lot of trends that make it interesting going forward. And, let's not forget that some of the transactions that you've seen, these are investors looking to deploy large amounts of capital. And when you combine sort of some of the trends I've mentioned, the population, I think Nigeria actually is quite ripe for that because the addressable market feels big. And I think the trends are there to really support growth going forward.
Fantastic. Full of a lot of statistics. Amir, what's your thinking on this question?
Yeah, I think Fope covered it all. She totally rounded up all the fundamentals, and I completely agree with Fope. But first of all, before I answer, I think a vote of congratulations are in order for Paystack and for Shola, and I think it cannot be underestimated what an important milestone this is for not just the payment ecosystem, but for the entire African entrepreneurial ecosystem. So congratulations, and I'm very happy. So I agree with Fope. The size of the market informs a lot of the optimism, but it's not the only thing, right? And I think what you're seeing right now is the harvest of the seeds that was sown 4 to 5 years ago, right? So the payment companies that were pioneers, who raised their early rounds 4 to 5 years ago, are now reaching towards a place where bigger rounds are possible and some exits are possible. I think what we are likely to see in the future is, one common thread across all the transactions that you mentioned, Soji, is they're all payment transactions, right? And that makes sense because payments are the foundations of fintech. I think what we're likely to see going forward is more diversified, bigger transactions, Series B, Series C rates, and that they're likely to come in credit companies next, as it usually happens, and savings platforms and wealth management platforms and so on and so forth. So I think the train has just started running, and the maturity of the payment ecosystem is a very good sign that we're likely to see bigger rounds and more mature companies and bigger growth in some of the other subsectors of fintech, as we have seen in other markets that we've invested in. Maybe just to add to what Fope also mentioned, I'll tag on that, I spent the first 6 years of my career investing in India. And when I look at Nigeria, it feels like there is quite a lot of harmony in the trajectory that India took and in the trajectory that Nigeria is taking. There's a large underserved population, mostly in the lower and middle economic segments. There is a pretty well-developed real-time payment infrastructure that is developed by a proxy government organization. And there's a large usage of cards for ATMs, but not credit cards. It's all debit cards. So there are lots of infrastructure similarities and incumbent similarities. There's this banking monopoly in India and in Nigeria. And if I look at that, I think any investor who does some benchmarking will see that the payment sector in Nigeria is just beginning, right? It is going to, there's a massive headroom for it.
That's very helpful, Amir. Thank you, Fope, as well. So we've heard from the investors. Now to you, Samuel and Shola. As builders on the ground, can you talk us through the key elements that have foiled successes in what you've built so far, and how these elements have evolved since your early days? Shola, you can go first, then over to you, Samuel.
All right, thank you. Yeah, let me try to articulate some of them. I think the first part of it would be just the mission. Personally, for me, like, I started Paystack for a reason. I started Paystack because I thought, like, payments landscape in Africa, I thought things, okay, just to articulate it again, I think, like, when I started Paystack, I wanted more, literally, and I thought I could create that. I've just been in Lagos and seeing how easier things are outside Lagos. Like, why is there no Stripe? Why are things not easy like PayPal? Just trying to figure out how we can actually create that was one of the biggest drivers. And then as we continued, Ezra joined, we started hiring more people. I started finding meaning, we started articulating that mission in a proper way. We started getting clearer that had to be done. This is the most under-penetrated payments market in the world. There are a billion people in the continent. It's like somebody has to figure out payment. And if we figure it out, the effect is just going to be amazing. It's going to be life-changing. The impact is going to be a lot. There's a lot of opportunity we can unlock. So I think putting all that together, I think that really, really helped. So I would say the first part of it was just like the clear focus on the mission. The second part was the team. I think we were very, very lucky with the early team. So just tied to the first one, I think I had a very good co-founder, Ezra. We had good founder dynamics. We didn't fight. There was no problems. Like, we were super aligned. And then our early team members were also very interested in what we were doing, and everybody that joined Paystack, we just kept raising the bar. Like, I like to say, like, I'm a very average developer, average software engineer, but by raising the bar with every hire and getting to 120 people, we've created a very, very, very strong business, a very, very strong team that can execute and execute perfectly. So I think that's the second part of it. And maybe the final part of it is, I would say, the ecosystem. So I was saying last week that I felt bad when I saw my face on the internet, like, I wasn't the one that built Paystack, the ecosystem built Paystack. Like, people invested in Paystack, multiple people. You know, Ameya talked about how 2016, like we're ripping it out. Like to invest in a Shola and Ezra in 2016 takes a lot of conviction. Like there was no way it was written that we were going to be able to make this work. Like it was not, there's nothing there, you know. Even a Y Combinator, when we went for a Y Combinator interview, we were doing $250 a month. Literally, think about that. And when we were doing the seed round and investors were thinking about market size, and I was telling them about the online payments market in Africa, in Nigeria, it was like a joke. They were good. They were all laughing at, oh, this is so small, you know. And then fast forward 5 years, Paystack is doing more than 5 times what Nigeria was doing before we launched, you know, and there's been a lot of progress. So I would say that the ecosystem, a lot of people had to believe in this for it to work. Like a lot of people rallied, a lot of intros, you know, just everybody on this call, even you, Sergi, you know the number of intros you've made for me, you know. So I think like the ecosystem in Nigeria is really powerful, you know, and I think that really helped in creating Paystack. So the second part of the question was, I think you said like, do those things, how has it evolved? You know, I think that the evolution continues to get better, you know, like the ecosystem, again, the more investors, a lot more angel investors, a lot more people are tech aware, a lot more people are actually working in tech now. You know, we struggled a lot to build the team, but it's getting easier. So I would say things are really getting easier. And the problems and the mission is still also like the more problems to be solved, you know. So yeah, I think that's how it's evolved.
Fantastic. Look, I always love your enthusiasm, Shola. It's quite infectious. But Samuel, I really want to hear from you as well. You know, you guys have built some exciting things on the ground. And just talk us through what your views are on the question.
Yeah, so I think Shola touched on a lot, and pretty much the fundamentals. The fact is that there's just a lot to do in the market. It's, you know, it's surprising, for example, that it's only, you know, a decade ago, as recently as a decade ago, that say the e-commerce, you know, revolution kicked in the market, and that is very, you know, very interesting to see compared to how, you know, how far advanced that sort of sector is in the rest of the world. And if you look at any other, you know, industry or subsector in the market, you will find that there's a lot of room to transform things from the analog ways to digital. And because there's just so much room and the market is so raw across many sectors, that provides a lot of opportunities. And even for us in our first venture with Shoregates, all we had to do was point at an industry that was, you know, fundamentally sizable, the retail sector, and see what we could layer on top of it in terms of, you know, shopping vouchers, digital gift cards, and something as simple as that, and as rudimentary as that in other markets. We just had to pretty much copy and paste it out here, customize it for the local context, and it worked, and it's generating, you know, a significant amount of revenue for those merchants in the local market. So let's say the market is just open for a lot of innovation, open for a lot of intervention. There's so many things that can be fixed that, you know, once you can really think about an innovative way to capture some sort of market share, you will, you know, you will see, you know, traction and growth. And, you know, usually, you know, it seems very impossible to achieve, as Shola mentioned with Paystack in the early days. It was a wild, almost ridiculous idea. And, you know, that is how it usually is. If it's obvious, then, you know, it's potentially not very transformative. And in terms of how it has evolved, we've seen a lot of rapid, things have sort of matured rapidly and very quickly. The talent landscape has changed significantly. There's some very high quality engineers in the market now compared to, say, 5-6 years ago. You know, it's getting more and more difficult to recruit. We're having to really look into other companies, and, you know, it's really sort of seen a lot of attraction in this space in terms of talent. So I think that's where we've seen the biggest, or personally I've seen the biggest, you know, change in the market. And people have recognized the opportunity and the potential impact that, you know, new technology interventions can produce, and they're really attracted in about learning and really improving their talent in the space. So I'll say talent has really evolved significantly, and that has been one of the key success factors for this space.
Okay, fantastic. Look, I'm going to come back to you, Samuel, to just dive a little bit deeper on some of the things your team has done around blockchain, etc. But let's go back to payments. I just want to spend a bit more time on this. So Ameya, you are invested in Flutterwave, which is into online and offline acquiring, as well as Paga, which is into offline and wallet-led agency banking. And Fope, you are invested in InterSwitch, which is like a fintech conglomerate nowadays and have done a bunch of roll-up acquisitions over time. Where do you both see the most opportunities today in online and offline payments? And can you talk us through how you envisage these opportunities will be unlocked? Ameya, you can go first, then over to you, Fope.
Thank you, Soji. So if you look at those two investments, Flutterwave and Pagatech, the theme is they're both infrastructure investments, right? And I think as a general rule in Africa and several other emerging markets, retail payments take off, but the infrastructure to support those retail payments is often broken, right? The merchant acceptance is usually low, interoperability is an issue, and often billers are not connected to merchants when they do have ways to accept payments digitally. And so these two investments were focused on solving the issue of merchant acceptance and for converting cash into digital and vice versa. And I think opportunities continue to exist in the infrastructure state, although this segment tends to be oligopolistic. So you're not going to have 10 different infrastructure players in payments infrastructure. They have network effects. Having said that, I think on the retail side, on the B2C side, my view is that payments as a standalone product is not really a product, right? It has to be embedded in some other product or offered as a marginal cost addition. So if you look at mobile money, for example, in East Africa, it is a marginal cost product that is tagged on top of a telephony service. If you look at the world's biggest payments company, which is WePay, which has 900 million active monthly users, payments is an extension of a communication. It's a chat app at the basis, right? So I think on the B2C side, on the consumer front end, the future of payments is to be embedded in a wider stack, a stack that solves some other problem, not just payments, right? Payments should be invisible, seamless, and enabling something that's more meaningful to me, right? Another example of this phenomenon of embedded finance that I'm talking about is Gojek and GoPay, billion-dollar companies, but the GoPay payment application is part of a bigger stack that is kind of a super app, right? So I think to answer your question succinctly, opportunities still exist on the infrastructure side, the processing, payment gateways, merchant acquisition, so on and so forth. But it's going to be a limited number of players that are going to win in that segment. And on the retail side of things in payments, I see more verticalization, right? Where payments are part of a vertical stack that solves some other problem and not as a standalone product.
Okay, fantastic. Fope, you want to jump in here?
Yeah, so thanks, Ameya. I think that was, I actually agree with a lot of your points. I think that the starting point and the building block is payments. And if you look at, even the dollars invested, mostly by VC funds, but the dollars invested into fintech in most emerging markets. So take China, take LATAM as examples. And even if you look at just Brazil, over 50 to 60% of those dollars have gone into payments, just pure payments. And Brazil is a bit nuanced because you have Nubank, which is a neobank, which is one of the largest neobanks now. But excluding that, most of the dollars have gone into payments. And I think it is for the reasons that Ameya mentioned, which is there's just such an under-penetration, and the need to create the infrastructure, I think, is the first step before you have any additional sort of or any additional business models within the fintech space that enable retail payments, as Ameya mentioned. I think when I look at the investments we've made, InterSwitch in Nigeria, Fari in Egypt, TPay, which is a mobile payment network in Middle East and North Africa, and more recently Tunes, which is a cross-border payment network. All of these players, I think, are infrastructure players that are creating the rails that enable connectivity. And usually it's connectivity across disparate parts of a payment network. So, InterSwitch, for example, where they started out was really creating interconnectivity for banks, for customers to be able to go to an ATM to get cash out, just that basic service. So I think you need those building blocks that can bring, in a way, I think I see it as like the rails that are bringing different parts of the ecosystem onto the rails. And then on top of that, you can build other services, right? So I think infrastructure is quite interesting and will continue to be interesting, as Amaya mentioned, and it was one of the points I wanted to make. You will have one or two leading infrastructure players in each market because of the network effects. But I think they're, apart from the fact that they're almost like tolls, right? For every transaction that goes past, you get a fee. You have the network there, but you can build other services on top of that. I think onto when moving beyond that is retail payments, as Amir mentioned, and really is sort of some of the problems that Shola is trying to solve as well. And I think within that, you could call them merchant payments, but I think within that, and what you've seen globally is that expands to beyond payments to other value-added services. And I think you will see, Paystack have started doing that, but I think you'll see that evolve over time across some of the other businesses in this space. And then I think the next part, which touches on the verticalization that Amir also mentioned, is what I just call sort of the digitization of other sectors, right? And typically when I look at payments in Africa, I always say, a lot of merchants don't really have a payments problem, right? They can always accept cash, and cash is instant for them. But they have a problem with other things like growing their businesses or, working capital. And I think for the opportunities going forward in other verticals, I think it's around creating holistic products where payments is a part of that product. So I'll give you an example. One of the things that InterSwitch is doing now is it recently made an acquisition in a healthcare platform called Akinlade. And what they're trying to do is really help hospitals or healthcare professionals really drive EMR, so electronic medical records, to create a whole digital system for a customer or for a patient who can get their records digitally, but also pay digitally. And I think it's creating these whole ecosystems in other verticals like healthcare or transportation that I think starts to become interesting going forward. And then obviously you do have, what I call the sort of last mile distribution within payments, which I think will evolve depending on the market, which is what the agency network is. And you're seeing a proliferation of that in Nigeria. Obviously, Faro in Egypt is a very good example of that. I think each market is different, but I do think they have a role to play as you see sort of mobile payments evolve in some of the markets that haven't yet gotten onto that, onto the sort of mobile payments ecosystem yet, like Nigeria, for example. And I think you start to see those players, they could play an interesting role, especially in digitizing the informal market in those markets.
Okay, look, this was good responses. I hear payments, I hear the role of the infrastructure, the rail, sort of like a toll. I hear you talking about the role of agency banking in helping, to get cash from offline to the digital space. And I also hear you talking about the role of embedded finance. So really good to hear about what InterSwitch is doing. It's good to know that these topics are not just happening in developed markets, but actually businesses on the ground, even in frontier markets, are actually following that line of thinking. And I think there's logic to what's happening there. I'm going to come over to you now, Shola. You are the man of the moment following Paystack's recent acquisition by Stripe, and congratulations once again for closing such a landmark deal in the Africa fintech space. For that, I'm going to ask you a three-part question. What are the biggest problems you are hoping to solve? Why do you think you are best placed to solve these problems? And how does your partnership with Stripe really help you solve payments problems across Africa? So 3 questions.
All right,
what are the problems? Why you? How does Stripe come in?
All right, cool. Thanks for that. I think we have like super clarity on where we go from here. I think there are like 3 things we're prioritizing over the next few years. The first one is rapid expansion. So Okay, I'll talk about all three first. The first one is rapid expansion. The second one is building tools and services for merchants. And the third one is reliability. For rapid expansion, Paystack has spent a lot of time in Nigeria. We've actually been very intentional about our expansion. And it was very intentional. We really, really wanted to solve the fundamental problem. I think we're now at that place where we can expand across the continent, and we're going to really, really focus on making that work. And the way we think about expansion is not just like, oh, we're now live in Kenya. No, that's not what it is. It's about like figuring out how to help people start and scale businesses. You know, in Nigeria, for example, if you look at the Google Play Store and you go to like finance, you will see a lot of apps that are not banks. Most of those apps are powered by Paystack. Most of those apps will probably not have existed before Paystack, you know. So a lot of our work is how can we help create and accelerate commerce in a market? And that's what we're thinking about. And we will be focused on like making that work. So that's the first part. The second part of it is just building tools and services for merchants. Like, one thing that annoys me a lot is that I think African businesses are undertooled and underserved. And it is really annoying because I'm a software engineer, and I wonder what percentage of software engineers are building for Africa. Like, if you think about the global percentage of software engineers in the world that are building for Africa, like that number is going to be extremely sad, you know? And so it is important for us to figure out how to build for this continent. You know, one thing I hear that again annoys me, I'm sorry, I'm using the word annoyance a lot, well, that's just because sometimes it's like, oh, Instagram commerce is Africa, like people sell on Instagram. Like, no, somebody is sitting in Palo Alto and they have a store somewhere, they're sitting down, we're buying, it's automatically getting delivered, you're choosing a red shirt, a blue shirt, and it's working. And then the colleague or the compatriot in Africa, in Lusaka or Lagos, has to like upload their things on Instagram. They have to sit on the DM. Someone has to choose, oh, is it a red shirt? What size are you wearing? You know, like, no, you know. So we have to figure out how to build the tools to help merchants in the continent start and scale their businesses. We've launched Paystack Commerce a few months ago. We're going to launch a few more of those services that are really built for merchants in the continent. And then the third part is reliability. And that is something that I would say either scares me or makes me happy. It scares me because as you get bigger, you get worse. And it's not like a problem. That's how life is, you know? And the example I like to use is, and these are hypothetical numbers, but if you were doing 10 million transactions and you were 99% reliable, what you would see is that you have 100,000 problems. But when you scale that to 20 million transactions, and you keep your reliability at 99%, you're going to have 200,000 problems. And so when I was starting Paystack, people were really complaining about the bigger companies, you know, and it wasn't as if we were better than them. I knew that, but I couldn't say it. You know, like it wasn't as if, it was just that at scale, you have to be more reliable. Like if I'm bigger than you, then I have to be at that scale more reliable than you. And it's something that people don't get right. And it's something that we get at Paystack. Like we have to be super reliable. The bigger we get, 99% doesn't work again. It has to be 99.99. And then as we get bigger, 99.999 until it gets like 12 nines maybe. And then we'll say, okay, you know what, we're tired. So I think that for us, it has to work. Like if someone is trying to pay a merchant, like payments infrastructure is very personal. It doesn't matter if it works 99% of the time. Like for that person that can't get their money, or for that merchant that can't get their business, we fail them. And for everybody we fail. It's not just Paystack that is failing. Like digital payments is failing that consumer. So if someone tries to pay and for some reason they don't get what they want, they might never pay again, you know, and it's so stressful. So we understand that, and we're taking full responsibility for that. And hopefully we will continue to figure out reliability. So again, just rapid expansion, building software and services, and improving our reliability, which I think we're very reliable now, but just continue to like make it more reliable. So that's the first part. I can't remember the second part. Okay, the second part is, why do we think what it was? You know, I don't want to make math. So let me skip that. It sounds like a rhetorical question, so I'm going to skip it and then talk about the last part, which is like, how does Stripe help us solve that? And I think, and it is one of the reasons why this acquisition really helps. You know, like, we knew that it was going to accelerate our mission. Like, we want the same thing. We're trying to do the same thing. Stripe is building a global payments and treasury network. Paystack is exactly trying to do up the same thing, just for Africa. So there's no better partner than Stripe. You know, we're learning from them. They've learned all these things. We're exchanging resources, but we're also still able to execute independently. And the interesting thing about Stripe is that they've invested in us 2 years ago. They trust us. We trust them, you know. And so it isn't like, oh, Paystack was for sale, we ran a process, we used investment bankers. No, it wasn't that. It was a natural evolution of a mission. And like, this is where we're trying to go. This is a partner that has supported us for the last 2 years. This is a partner we trust to support us for the next 2 years. So I guess, having said all that, it's something that really makes me excited, you know, because we're just now going to focus. I don't have to be talking to investors again. Where are they? You know, sorry. You know, so I was super focused and just like getting the work done and achieving our goals. And it's something I'm super excited about. So yeah, I hope I've answered your 2.5 questions.
Yeah, look, that was good, Shola. So what I got from your responses was, you know, rapid expansion, building for Africa, and I really liked your context on how important reliability is for the job you guys do, and also good to know that the ecosystem will still have you running things as you move into the next phase of your evolution with Stripe. So that's also good to know. Now to you, Fope and Amir, I'm really interested in knowing how you think these three categories of investors would approach the Nigeria fintech opportunity over time. In one corner, we have global card schemes such as Visa and MasterCard. Then we have large Chinese tech such as Alibaba, WeChat, Transsion, and even Chinese investors in Opay, for example. Then finally, we have big US tech, and we've seen Stripe get active of recent with Paystack. So far, the CAT schemes and Chinese VCs seem to be the most switched on. How do you think the strategies of these investor categories could play out over time? Fope, you can go first, then over to you, Amir.
Sure. So I think, look, the way I think about, if you start with the card schemes, because they've probably been the most active globally in terms of M&A, and I will put them in the bucket of them and other strategics, even like Stripe. And there's a trend that you're seeing globally, right? So, you know, the M&A trend you're seeing with those players is, you know, they're either acquiring new technologies like different sort of fraud management or cyber risk management technologies. There's sort of vertical integration where players are going from, you know, offering both online and offline payments. There's geographic expansion, which obviously for US companies probably started with Europe and Asia, LATAM, and now we're seeing that in Africa. And then there's the last bit, and I think that's obviously where on the geographic expansion, that's sort of where I see Africa playing a role, which is where, you know, to continue to, you know, when you look at other markets, and I mentioned the growth in Africa is much higher than in other markets. So for any of these players to continue to deliver growth to their public market investors, they need to search for that growth, and they will be looking for new markets. And then obviously Africa is one of them. But I also think for card schemes in particular, what's interesting, I think, is, you know, this sort of, what I would say a hedge, right? So there are these alternative payment networks that are developing outside of the card payment rails. And you know, some of the card schemes are going to have to sort of think through how they participate in that, or how they acquire assets that allow them to not be disintermediated as more transaction flows go through these alternative payment rails. So like the wallets that we're seeing. So I think that will continue to be interesting. And actually, I think that and the geographic expansion and the search for growth will drive more activity in Africa across all of the players that you actually mentioned. Now with the strategics, they obviously play a very important role. So like Shola mentioned, Paystack and Stripe had a long, well, I say long, it was 2 or 3 years, but they had a relationship, they had a history that worked together. Even in the case of Visa investing in InterSwitch, Visa and InterSwitch have worked together for several years. And so there was an understanding of, to some extent, of the market. They'd seen the trends evolve. And, I think some of the players actually see, as Amaya mentioned, maybe they see parts of Africa and Nigeria as India, where India was, sort of 10 years ago, and people have seen how those markets have played out. And so it creates the comfort actually to make those investments. Now, the strategics are important in terms of them taking an active participation in the market, because ultimately, if you're a VC investor, which is your last category, you kind of want to understand that there's an exit for you. And that exit typically would be to a strategic or would be an IPO. And I think what we're seeing is, I think the strategics have started to create actually that focus and that attention from VCs in Africa. Obviously, people like us have been there and been doing this for a long time, but really creating that focus from international VCs who are not looking at Africa and seeing that actually there is now more interest from global strategics and therefore a more likely exit path. I think the other thing, even when I look at the VC community, is something that Ola mentioned, which is, a lot of VCs are looking, obviously they're looking for high growth, high addressable market, but they're looking for strong teams. And I think to Ola's point, there are more engineers now who are, looking to build businesses in the fintech space, who are joining some of these companies like, like Paystack, like Flutterwave, like InterSwitch. And so you're creating sort of a new crop of entrepreneurs with strong teams that actually VCs feel like they can back now. And I think that will also continue to generate interest in the ecosystem in Africa over time. So look, I think, I think the investment is actually just going to grow. Look, I think last 2 years, we've seen some of the highest dollars spent in Africa in fintech space, which is, over 70 times what you had 5 years ago. So that is growing, but it's still very small. If you look at it on a relative to GDP or per capita basis, it's still one of the lowest in the world compared to LATAM. But I do think that will continue to grow over time from all of these different constituencies that we've mentioned for, the reasons that I highlighted.
Super. Amir, do you have some thoughts on this?
Yeah, I agree with what Fope has articulated, and maybe just to tag on, the strategics you talked about, I think, have been very smart in taking bets across different companies in the payment infrastructure. So if you look at MasterCard and Visa and tag their portfolio, they're invested in Paystack, InterSwitch, and Flutterwave. Flutterwave's latest round was led by Visa and WorldPay. So if I look at MasterCard and Visa, given what we talked about earlier, they're not going to be 10 different players in infrastructure. They've hedged their bets well, right? And I think we can expect a similar pattern in other large countries in emerging markets and countries in Africa which are not dominated by telephony players. So I think that strategic interest, it makes perfect sense from a MasterCard and Visa and other large payment companies like WorldPay and so on will continue. But as we said, again, you can't expect 10 different transactions, right? There'll be a few transactions per country in the leading players. What I'm more interested is seeing how things evolve also on the other side, right? So I think that's where the Chinese investors come in, because at least last year when all of these investments happened, I think their lens was more to create a consumer platform, which is a multi-service platform, and try to replicate what an Alipay and WeChat did in terms of creating super applications, right? And they used payments and a transaction account as a foundation, but then there was OCAR and OBUS, and you know the story. And it's still an open question whether such a play is possible in Nigeria or how things will evolve. And maybe I'm stepping onto a future question, but in my mind, the question one should ask is, how does a consumer access day-to-day financial services, say in Nigeria 5 years from now? What's that going to look like? Am I going to access it from a standalone fintech app? So one app for payments, one app for credit, one app for where I save my money? Or is it going to be fully verticalized as we are talking about? So payments, when I'm paying on an e-commerce store, it's completely embedded in there. When I'm paying for my ride, it's embedded in Uber. So that's number two. Are there going to be challenger and digital banks or new avatars of incumbent banks, or which are going to be my one-stop, one window for all financial services? Or is it going to be a super app, right, which gives me everything in one place? And so I think there are these 4 different options. We believe that it'll be more bundled, so more towards a digital or challenger bank setup or a super app setup, because there's so much harmony. And from a consumer perspective, I get everything in one place. But that's the real question. That's the $1 million question. And I think as that gets resolved in different markets, you will see money flowing into funding those particular segments.
Okay, fantastic. So what I'm hearing both of you say is the strategics have a critical role to play in the exit picture, and it helps when they've had a pre-existing relationship with the fintech. I'm also hearing that Chinese investors are trying to replicate multi-service platforms in Africa, which they've seen work in Asia. And actually, this is a theme that we will break down in a future conversation in the new year, come 2021. For those watching online, please drop your questions on YouTube or in the comments box on the website. And if we do have some time, I'll take some of the questions. Okay, so now I'm going to move over to another very interesting topic, which is basically blockchain and cryptocurrency. So I want to spend the next few minutes with you, Samuel, and I hope we can learn a thing or two from your ongoing doctorate in blockchain economics. So 2020 seems to have been a breakout year for cryptocurrencies in Nigeria, and I've personally been quite fascinated by their cross-border use cases, considering capital controls on the ground in Nigeria. So Samuel, your team is invested in Busha. It would be great if you could run us through key elements behind the takeoff in cryptos so far in Nigeria, and some of what you think are its most exciting use cases.
Happy to do that. Yeah. So cryptocurrencies in general, they do not only solve technology problems. The technology for payments and remittances and all of these things exist today, and it could work. It could work in an idealistic manner. But the design of the financial infrastructure, the legacy systems creates a few incentives that in many ways, are conflicting and disincentivize transactions and trade for the average user. So what cryptocurrencies, philosophically was built to do, or what it has done, is that it not only solves a technology problem, but it also seeks to solve the very, very critical and fundamental political and economic problems as well. So if you, for example, think about, cross-border transactions or remittances, different, agents within the value chain have different incentives. From the Western perspective, for example, those the players there, the authorities, they are interested in, controlling the flow of illicit funds across borders, trying to prevent things like, money laundering, terrorism financing, and things like that. And to do those things, they will create systems and create infrastructure and create policies that, target, those type of transactions, regardless of what that does to the average user. So the systems will be excessively punitive, particularly because of those reasons. Here as well, while the authorities are interested in encouraging financial flows into the country, they're interested in doing that, with a grip on price, the grip on exchange rates and conversion values. They are also interested in ensuring on the flip side that capital doesn't leave the country. So there are things like limits on transactions going out and things like that. But for the average user who's just, for example, a freelancer trying to get paid from the US or from China or from anywhere across the world, all of these things is not of concern to them. They're not interested in the politics. They're not interested in in engaging in illicit transactions, because those are done generally by a minority of the population anyway. So for all of these reasons, the average user, the average recipient, or the average sender are encumbered with a lot of things that shouldn't really matter to them. cryptocurrencies by design was built with this in mind, to see that, hey, from the very fundamentals of the creation of the asset itself, to the price discovery, to the distribution, everything has been done in such a way that central agents are not really having to interact or control anything. So even if there are intermediaries in the system like Busha, an exchange that facilitates the conversion from cash to cryptocurrency, the rules of the game are pretty much determined by the market and not by central agents. So that's what is exciting about cryptocurrencies in general. They solve the problem of disincentives within the economic system, and they're also very technologically sound security-wise, and they also have a lot of political considerations built into them. In Nigeria Nigerians are very, they've really gotten the short end of the stick when it comes to real cross-border transactions for a long time. The market is deemed risky by default. It's a very high-risk destination, but wherever you go, if you try to send any value into or out of Nigeria, for example, if the figure is in any way significant, you will go through hurdles to get that money into the country or out of the country, regardless of the motivations, regardless of the capacity. By virtue of your passport, you are really subject to a lot of discrimination, biases, things that just make transactions very difficult. And what this does is that it caps the economic mobility of the average person. You find yourself having to go through crude, black markets to engage in transactions. And what this has done is that it has forced the population to think about alternatives. What can they do to really try to circumvent this system that is designed really to discriminate against them? Crypto has really seen a lot of adoption in Nigeria for that specific reason. There are lots of capital controls locally that restrict the amount of money that you can access. And for traders that require significant volumes, for individuals that just want to get paid internationally, they've really taken to cryptocurrencies as a means to do that. And the reason for that is that this asset has evolved across the world to become very liquid. You can really, access an asset like Bitcoin anywhere in the world, send it to Nigeria, and you will find a market to liquidate that for local currency at a fair value, also instantly at a good, with sort of good transaction times as well. So a lot of infrastructure players have also come into the market. You find a lot of exchanges like Busha that are now in the market with the intention of the mission to, to improve the user experience around cryptocurrency. So the goal for Busha or for other crypto entities, even another venture that we have called Shola, is to really build out use cases for cryptocurrencies that tries to obscure the technical complexities around the asset, and by enabling people to really get on board into the space and get off the space as well, very easy and very seamlessly. And because the asset itself is fundamentally decentralized and has been created by, the factors that affect the creation and destruction are determined by the users themselves. The rules of the game are determined by the users. So the people that are playing on the platform level are not really legislated by, central authorities. So things like, how much the assets should convert for, how quickly the assets should be sent from one market to another, that is determined by pretty much the fundamentals of the technology and of the market itself. So that's very, very exciting. So now you see a lot of use cases for crypto, primarily, as you mentioned, for cross-border transactions, where you see an average user here in Nigeria being individuals that are sort of working as freelancers, or even people who are just ordinary recipients of remittances that are just frustrated with the idea that they have to receive dollars or pounds at an artificial exchange rate that is not profitable for them. They turn to cryptocurrencies and they receive that asset instead and convert it at the fair value in the market. You find people who are local traders that just cannot access FX for large-scale transactions. Want to pay a vendor in China, a vendor in Turkey. How are you going to access the $100,000 today in Lagos? To make that, to settle that transaction. A lot of them now turn to cryptocurrencies to consummate those transactions in the market, just because not only is it difficult to access this sort of effects in the market? Sometimes it's just almost impossible. So the macroeconomic conditions and the political conditions globally has forced people towards cryptocurrencies, and Nigerians have become one of the most aggressive adopters of the asset in the market. We are just hoping at Busha and at Ashura and all the other players in the market to make the experience better, to really also align with compliance as well, to make sure that these transactions are not really being used to facilitate illicit financial flows as well. And we're just hoping really to help drive the adoption of cryptocurrencies in the market as well.
That's very insightful. So I've heard you talk about cryptos helping remove many problems that senders or receivers have. Cross-border payments is a significant use case, and the fact that there is a market on which different cryptocurrencies settle at market clearing rates is critical and helps address some of the capital control restrictions. Okay, I was wondering if anyone else had a view, or even you, Samuel. Does any of you think this crypto buzz in Nigeria is here to stay, or will it fizzle out once capital controls normalize and FX liquidity rebounds?
Well, I guess
go ahead.
Yeah, sure. So I think if we have an ideal market scenario where capital controls are relaxed, FX liquidity rebounds, things are just pretty much working, cryptocurrencies will have to compete, fairly and squarely based on its own merits in terms of, it has to compete on user experience. It has to be fast, it has to be cheap, it has to do all of those things and just pretty much compete on that basis. But beyond that, there's also the supplementary value of censorship resistance that we've seen in cryptocurrency that would retain marginally additive value to the user. And you saw that, for example, during the recent protest where people use this as a form of censorship resistant payment channel, and it was very, very useful for that purpose. So we will see that use case as well. But I think that there are many ways that cryptocurrencies themselves can compete fairly based on user experience, even if a lot of these capital controls are lifted, so they can confirm faster, and they can be transmitted in a cheaper manner compared to, say, traditional transfer channels and things like that. So I think it's probably here to stay as people determine and realize the merits of the technology itself, and it will just pretty much be yet another competitor in the payments landscape.
Okay, fantastic. I'm just cautious of time. We have to talk about the banks, who are really the classic definition of financial technology, but they're often left out of this conversation. I presume some may have been interested in acquiring Paystack, but I suspect they might have balked at valuations, or maybe you weren't even sure of culture fit. Now, it looks like the banks are going it alone, with holding companies springing up once again, which basically unlocks a large pool of capital to invest in areas the banks would not have previously considered. For you, Shola and Fope, how do you think the world of Nigerian banks and fintech looks like 3 to 5 years from now, given what you see from your side of the spectrum? Shola, you can go first, then over to you, Fope.
Yeah, no, thanks so much. I think, and I'm not trying to be diplomatic, but I think it will still continue to be very, very collaborative. I think banks will continue to collaborate with fintechs. That's because I think it's so hard to build a technology company where and if you think about fintech, financial technology, I think the technology part of it is something that banks will have to figure out how to collaborate on. And that collaboration will continue. Especially Nigerian banks, if I'm looking at it from Nigerian perspective. I also think fintechs will also need the banks as we think about scaling, as we think about some of the other things we're trying to do. So I think it will just continue to be very collaborative. That's what I think. Yeah, I don't know if Fope has a different perspective.
Yeah, no, I actually think it's an interesting one, right? Because in if you look at other markets, I think banks are forced to collaborate with fintechs because they have more legacy systems than actually I think some of the banks that we have in Nigeria do, right? They're sort of younger. They've sort of invested in technology. You have some pretty sleek mobile banking apps. So some of these banks have actually done a lot of work. Access Bank, does, billions of naira in instant loans already. Admittedly, that's through a collaboration. But I think it's an interesting one. I think the technology part that you mentioned will still be key for sure. But I do recognize that banks have invested in technology as well. Maybe not at the pace and not with the innovation that some of the newer players would have, because ultimately as a bank, you will still be somewhat, I wouldn't say the word is hindered, but at least impacted by what your legacy processes are and actually some of the regulation that you have as a bank, which may limit the sorts of things that you do. So I think that's one part. So I do think some banks will still try to go it alone and others will. Now, where I think it becomes interesting is the scaling part, right? And where fintechs have been able to scale much quicker than banks globally is because they've had VC funding that basically can subsidize the cost to the end consumer for providing services, and that allows you to scale and maybe bear some losses in a short period. While you return to sort of a high return on investment business over the longer term. And the question is whether banks will be positioned to do that even within the holding company structure, and whether they can, there's obviously, most of these banks are public market banks. They have investors, they have shareholders that they're beholden to. And I think the question is, how do you balance achieving the scale that a fintech can do more nimbly as a bank with some of the overhang that you'll have from being scrutinized by public market shareholders. And then I think over the long term, for me, what I keep asking is, when you look at where fintechs are going globally, some fintechs started out as carve-outs from banks. Now they're returning to becoming banks themselves because ultimately they're now rebundling. And I think the question is, in Nigeria, we're sort of at the beginning of that. And, I question what that looks like over time, whether, fintechs now start to rebundle back into banks, or whether banks go it alone and can survive, or whether actually banks start to become the strategics that acquire some of the fintechs that we're seeing in Nigeria.
Okay, super.
I may jump in, Soji, just for a 30-second add-on. I completely agree with what Shola and Fope have said. I also think we need to draw a distinction between partnering and acquisition and enterprise services and consumer brands. So I think when it comes to enterprise services in payment infrastructure and compliance services, for example, there's a greater willingness to partner. But when it comes to a consumer brand, I think banks, and rightly so, are going to be fearful of somebody intermediating their services with the customer and the profit pool shifting towards the customer over time, right? And I think there it'll be outright acquisitions. In fact, if you look at fintech acquisitions across the world, most fintechs don't reach $1 billion valuations. They're acquired by banks in between. So from somewhere from $200 million to $1 billion, most of them are acquired. And that's for a reason, because banks, if they're sitting on cash, wouldn't want them to become consumer brands and worry about that.
Fantastic. So if I'm getting all of you correctly, the future is uncertain, but Nigerian banks will remain relevant. But the key question is, as public entities, how do they balance fintech-like growth with the returns that the market would expect? And I'm getting from Amir that the banks do have the capacity to acquire fintechs. It's a trend globally, something we need to keep an eye on as the market evolves locally. Okay, so we have one question, well, two questions from the audience. I'm just going to ask that very quickly. If anyone has a view, feel free to answer. The first question is, do you think the central bank will ever create a digital banking license similar to what we see in Singapore? If someone has a view on the PSB license in Nigeria, feel free to use that to respond. The second question is, do you think mobile money will have a significant growth in Nigeria? And if so, how do you see this happening?
Happy to go first. I think the second question is linked to the first, actually. So I do think for mobile money growth to take off, you need the PSB license to be issued. And And ultimately, you probably need that to expand in terms of what it allows the PSB license holders to do. Look, I think the central bank have said they will issue licenses. I do think there is still the discussion as to who wins the consumer ultimately, whether it's the banks or the telcos, and I think that's going to be an ongoing conversation. But ultimately, everything, what I always go back to, and I get this question a lot as to, how do you see regulation impacting payment businesses in Nigeria, is the one of the key goals of the central bank is a cashless society, is trying to digitize most transactions, and obviously for the government it's better because you can track more transactions and it means more taxes. So whatever it takes to unlock that, I think that's where they will end up. And all of the, if you look at all of the policies, whether in the short term they seem detrimental to payment companies or not, it has been to drive more cashless. And I think PSB is an important part of that. And so I think ultimately it will come. It may come in a different shape and form, and how players use it will evolve. But I do think it does feel like it is part of that strategy ultimately, if they want to really drive cashless more broadly across Nigeria.
Maybe I'll tag on and say that, again, this is a payment service banks. Payment banking licenses was something that India introduced 4 years ago. And if you look at the Nigerian regulations, they're very similar, as they should be. No need to reinvent the wheel. I think two challenges remain. One is the banking lobby. I'm just going to say it, right? Why are there only 3 licenses issued till now? Why doesn't MTN or Airtel have that license? Is a question we should all be asking. And second, I think even in the payment bank, when you cannot lend and you have regulations that mandate certain number of branches, even in uneconomical areas, we've seen in India that it's a mixed bag, right? There are companies, multi-billion-dollar companies with a lot of cash that have just failed to make this model work, because the only thing that you can earn money from is payment transactions. And if those transactions are running on a central switch that only allows you to charge some single-digit nairas, how are you going to make it work? So I think there's one challenge which is a regulatory and political challenge, and then there's another challenge which is an economic challenge. I trust that the central bank wants to achieve that mission of cashless strongly enough that it will overcome these challenges, but they remain.
Okay, super. Look, this has been a really fantastic conversation. I'm just going to ask a very quick fire question. So just throw at me what your view is. There's so many fintech verticals we've not discussed today, but looking ahead, what excites you the most? We can go in the same order: Fope, Ameya, Shola, Olaoluwa, and we wrap it up.
Yeah, so I think, I've mentioned some of them. We talked about infrastructure, we talked about retail payments, we talked about embedded finance. There was an announcement by Google yesterday that they've introduced the ability to lock Android phones for the benefit of banks and other lenders. And I think that's interesting when you think about the lendtech space, which I think is still evolving on the continent. And it is a way to sort of, it's like collateral management. Like, how do you enforce payments? I think a lot of fintechs have tried to do it in lots of different ways. So I think, look, there's also, new technology that I think will open up new opportunities, like the one that I just mentioned, and lendtech is an interesting one. And I think, I think the lendtech space is one that, that is one to watch going forward.
Yeah, what's exciting to me is fintech that's not fintech in the future. Fintech that's part of another core service, and that could be a bunch of things as we've talked about. But I think that's where the wheels are running towards.
Maybe I'll go then. I think cross-border trade or cross-border enablement. I think there are over 54 countries in Africa. There's so many walls across the continent. So whoever or whatever is going to break down some of those walls is something that really excites me.
Yeah, I might be biased, but crypto excites me. We have seen some incredible growth. I have some data there. Less than 2 years, it's done close to 300 million in transactions. So that is in dollars. So I see the growth there is pretty aggressive, and I think that that's where we'll see the next frontier of growth.
Okay, look, I got a follow-up question for Fope and Ameya. If you have a quick view, this is, where do you see the value for investors in fintech? I believe you've answered these questions already. And how do you price them? What kind of payout profiles do you see or expect from such businesses?
At the cost of sounding like a broken record, I'm going to say it again. And I'm going to give an example now, instead of just being theoretical.
Okay.
The most recent investment we made was in a company. We're fintech specialists, right? We only invest in fintech. And so the most recent investment we made is in a company called Maxhub in Egypt. And what they do is solve the logistics and commerce problem between FMCG manufacturers and your mom and pop stores on the corner of your street. So they deliver the soaps, the Cokes, the milks from the Pepsis and the Cokes to the mom and pop stores. That's not a fintech business. Why did we invest in that business? Because we think that if someone is going to solve the problem of working capital and inventory credit for these small mom and pop stores, it is more likely to be someone who shows up with your inventory at your door every week, as opposed to some salesman from a credit company. Right? The cost of acquisition, especially in these analog markets, is very high. And so I'm not saying this is a universal trend or that everything is going to be solved by embedding into verticals, but there are certain products and certain segments. And I think smallholder farmers, we have another investment in a company called Pula, which is a crop insurance company. And that product is embedded in a seed and fertilizer. There's a sticker on the back of a seed and fertilizer bag. When a farmer buys it, she just needs to enter a number and she's registered. And that's a crop insurance product. So how do you bring in finance in my day-to-day life, right? How do you embed it in the fabric of my daily life, as opposed to asking me to step out of it, change my behavior and buy something else? Solve my real life problems for me, and then make finance a servant of that goal, as opposed to selling me some fintech product and expecting me to reorient my life around it. Right? That's what excites me. That's where value resides. And I think you're starting to see a lot of fintech dollars flowing into these sectors, which are not ostensibly fintech companies.
Fantastic. Okay, this has been great. I found this conversation really insightful, and I hope you watching did also. I would like to thank you, our panelists, today for your valuable time. The recording will be available on our YouTube page, and I look forward to engaging with you all even more meaningfully on the fintech space in Nigeria and other African and frontier markets in the new year. Thank you. Wish you good health and a strong close to the year. Take care and goodbye.
Thank you very much.
Thanks, Aji. Thanks very much.
Out of context, facts and figures can easily mislead. Is Africa's growing population a weakness? What about tomorrow? Don't get boxed in by today's opinions. With the Africa Report, understand Africa's tomorrow today. Politics, business, opinion, the Africa Report decodes the news for you. Available online on theafricareport.com.